Meanwhile, the property sector has been upbeat, firing on all cylinders, with the South African listed property index gaining over 20% year to date. Joining me now is John Jack, CEO of Galetti Corporate Real Estate. John, thanks so much for your time today. As mentioned there, the SA listed property index up over 20%. SA REITs are up 38% year to date. Maybe let's start off by talking about what best explains the turnaround we are seeing in the sector. Of course, this has been 5 years in the making.
Yeah, so it's a number of different factors, but one of those factors is just the reduction in vacancy. So effectively what's happening, and real estate is effectively a result of what you're seeing in the market. So we're seeing electricity availability, we're seeing a little bit of GDP growth. I think reported recently is 2% GDP growth. We're seeing interest rate declines. And obviously where you see interest rate declines, usually yields track those interest rates. So when you get a yield compression, on the other side, the value of the properties goes up. And so it's all linked to the general economic metrics.
And that brings me to my next question there. You mentioned those falling interest rates as well as the long bond yields that we have been seeing coming down as well. Talk to me about the re-rating we are seeing in that sector and how vulnerable the property sector then is if this changes.
Yeah, property's very, very vulnerable to two things. One, GDP growth, and the other one, interest rates. So if you get huge interest rate spikes, that hammers the real estate industry, because typically, like I was saying, the yields follow that, follow the interest rate curve, right? So over time. And then another thing which drives it is obviously your GDP, and we're seeing some GDP. We've had depressed GDP for so long, and now we're seeing a little bit coming through. And so they are extremely susceptible to those numbers. But at the moment where we see the market, given a little bit of GDP growth, given a little bit of a tailwind of having some electricity in the market for once, we're actually seeing general business confidence improving. And so what you see is the market moving, where you have residential increasing, obviously the Western Cape leading the pack, but even in Johannesburg recently, you've seen a lot of demand in that residential space. And then follows typically the business spaces. So your offices, you get take up in your office space, and it just drives the whole industry. And ultimately, that supply glut that was left over from 2020 has seen a take up. And as soon as you see take up, you get market rentals starting to increase. And when you get market rentals increasing, it drives the actual property value at the same time. That combined with the interest rate at the same time,
And just zooming in on those vacancy rates that we are seeing coming down across major property sectors, talk to me about where we're likely to see the most growth, right? You talk about the residential market starting to recover as well as the office property market. But we do know that everyone thinks the real money is within the logistics sector. We are also seeing retail also doing very good, especially the retail centers and townships and rural areas.
This might be a contrarian view, and it's my own, but I like the office sector, to be honest.
Wow.
I like the the Johannesburg office sector. I think it's just been completely oversold, and we're seeing so much leasing activity there. And as soon as that supply glut is taken up, of course, then you're going to get the rentals driving. So it's a real opportunity to see a turnaround in that space. We've seen it in Cape Town. We've already seen rental growth. Rentals are topping out 350 Rand a square meter in Cape Town. And those are real numbers. When it comes to Johannesburg, we're talking closer to half of that number. So you can't really align the two. And they used to be far more aligned. And so we think it's going to snap back. You're going to get over time, always market wants to equalize. And I think Johannesburg has been so oversold, especially in the office sector, that I think you're going to get a return. But that is quite a contrarian view. I mean, the banks say OBA or ABO, anything but office. So let's see. The banks have to play their part as well and fund the office acquisition. So you'll see that driving.
I mean, you're absolutely right. If you look at some of the sales that some of these property counters have done, it's usually around the office property sector, or we even see them refurbishing those office property centers, turning them into residential areas. So that's a really interesting view. I guess we'll see how it all plays out. I want to ask you about the bulk building we've been seeing. I mean, over the past, 2-3 weeks, I'm sure I've come across 3-4 cents announcements around property companies managing to raise money for growth, right? Talk to me about that and the kind of confidence we are seeing within the sector, and whether we might not perhaps be getting ahead of ourselves.
I think it's twofold, really, and I think what you're going to see is some consolidation of the industry. So when you start looking at that book building, one is for this growth to go and look for opportunities in the market. Some of them are already being squeezed out of the market, and I don't think there's much more to run. I think, Western Cape continues to surprise us, but I think it is starting to get really, really heady where it sits at the moment. Obviously, in different pockets, different things are happening. Again, Johannesburg is just so oversold that there must be value, and we've seen people starting to look for value. The different announcements regarding mayoral races and what they're going to do to improve the city and the infrastructure, etc., and that's only going to provide competition, and competition only means that better things are going to happen, right? So if you look at that, and if you look at overall at the market, you've got to go and look at then the different property counters. Are they book building to go and acquire other REITs or other entities that own properties? Okay, so they could go and acquire other property owning businesses that are undervalued, or they're going to be buying the actual properties. And some of the time you actually find these property owning businesses are undervalued, and that's probably the best place to go and find value at the moment. So you could see two different things happening: a consolidation of the industry and some mergers, or alternatively buying of assets and cleaning up, because there was this very much a focus on diversification, and then came a focus on specialization, and now you see a bit of a focus on diversification again. So it just, everyone just swaps their assets all the time, and it's about who gets that particular game correct that wins, right?
And what we're all really hoping for here is prudent capital allocation, considering that we are still in a very uncertain economic environment. John, let's leave it there. Thank you so much for your time and insights today. That was the CEO of Galetti Corporate Real Estate, John Jack.